on the future uses of AI in banking, I think it's critical for us to also call out the need for responsible AI, governance, and explainability. These are no longer just buzzwords, or in the words of Rick Astley, how do we ensure these systems are never going to give you up, never going to let you down?
You're stuck on those 90s themes. I can't believe I've been rickrolled on compliance.
Welcome back to A to Z, the podcast where we decode the boldest shifts in fintech finance and everything in between. I'm Aman.
And I'm Zubin. And in today's episode, we're going to ruffle a few feathers because we're talking AI in banking, not as a tool, but as a total system reboot.
That's right. This isn't just about slapping a chatbot onto a legacy platform and calling it innovation. We're talking about rewiring the way banks operate from the core.
But first, before we get into this, I got to ask you, my friend, how are you? It's been a while. And more importantly, where in the world are you?
Where in the world? I like the Carmen Sandiego reference, Zubin. I've just returned from incredible India this week. I celebrated my birthday, my last year in the 40s, after 25 years in the home where I grew up and where I actually found Carmen Sandiego and my first XT computer.
Love it. Happy birthday, dude, again. And now, before we get started, a quick disclaimer. What you're about to hear is basically two dudes riffing. We've said this before. I'm going to say it again. It's just us pontificating about the future of finance. We're not offering financial advice. We're sharing our perspective on the bold shifts that are shaping the industry. Now, with that, let's get into it.
Zubin, before we get lost in the land of prompts, agents, and hallucinations, let's rewind a bit. Most people think AI started with ChatGPT. Spoiler, it didn't.
Now, not even close. AI was born in the early 1960s, sipping black coffee and writing logic rules. Welcome to Symbolic AI, or as the cool kids called it back then, GoFi. Good old-fashioned AI. Think logic puzzles, not neural networks.
Imagine building a brain using Excel formulas. That's how brittle it was. It could solve logic puzzles, but you throw a cat video in there, the whole system crashes and you've got blue screens of death.
Exactly. In the 90s, while most of us were making mixtapes, and I'm sure Aman was watching Miami Vice, we shifted our focus to machine learning. The idea, don't teach the machine rules, let it learn them from data.
Yeah, and that worked until it didn't. Early ML needed tons of labeled data. It was like teaching a kid to read, but you had to label every word manually, not scalable.
And then came deep learning in the I should say not 19s, the 2010s almost, neural networks with layers. Suddenly machines could see, even beat humans at Go. I remember I was at Google when that happened, and Go, just as a reminder, is the ancient Chinese board game long considered too complex for computers.
Poor Lee Sedol. AlphaGo didn't just win, it redefined how we think. And just when we thought that was the peak of AI, along came Transformers, Zubin.
That's right. Not the Michael Bay ones. Transformers, the architecture that powered GPT, BERT, Claude. They learned language contextually, and foundation models were born.
Right. And in 2022, boom, generative AI hits the mainstream. Now AI isn't just predicting, it's composing music, writing code, making memes.
Crazy. And we're far from done. The next leap is agentic AI. These models won't just respond, they plan, they act, use tools, and even loop in humans.
Which begs the trillion-dollar question. Is this road to artificial general intelligence, or even is it a road to superintelligence?
Spot on. First up, it's artificial general intelligence, or AGI. That's human-level AI, flexible reasoning, adaptable across domains. And it's not just a chatbot that writes poetry, it's one that can design a new kind of poetry engine.
And beyond that, superintelligence, that's the end game. An AI that's smarter than the best humans in every field, better than PhDs in any field, call it science, philosophy, emotional intelligence, even strategy.
Yeah, AGI is like building a teammate. Superintelligence, that's really building the god, or at least something that thinks like one.
So Zubin, you're saying Terminator meets TED Talk.
Only if you don't screw it up. But for now, we're still teaching the machines not to draw hands with 5 fingers.
And fair. But from GoFi to Gen AI, the arc is clear. AI has gone from logic to learning to leaping ahead. Now, let's shift gears and talk a little bit about the industry that we spend a lot of time on in banking and why implementing AI is so tricky. It boils down to what I like to call the three legacy traps. These are legacy business models, legacy monolithic infra and process, and legacy mindsets.
Let's start with the first trap, legacy business models. Most banks remain balance sheet heavy businesses and operate under traditional rules, taking deposits, lending money, and charging fees. This model has remained unchanged for decades and faces slowing revenue growth and sort of incremental innovation. And most importantly, most of them are focused on launching products instead of building platforms.
Yeah, and now they're hoping AI will sprinkle some pixie dust on those margins. But here's the thing, Zubin, you can't expect AI to deliver exponential outcomes if your business model is linear.
Yeah. So let's move to the next one, right? Like legacy monolithic infrastructure. I don't care how clever your Gen AI is, but if your core system was built when Netscape was cool, it is going to choke.
Zubin, forget Netscape. I think of IBM's and AS400s, batch systems, siloed data, manual workflows, tons of pilots and trials, but very few MVPs, and even fewer that scale. When I was at HSBC, I used to remind teams there that we had more pilots than British Airways. It's not that AI can't scale; it's that the stacks can't.
And then there's that third trap, right? Which is the legacy mindset. And this one's the killer. You got suite who do not trust what they cannot track.
Look at Gen AI, it triggers anxiety. What if it hallucinates? Can probabilistic models work for regulators who want sort of deterministic outcomes? What if compliance melts down? While these are very real concerns, the real blocker isn't tech, it's trust, it's talent, it's turf. And what if it actually works and forces people to rethink their jobs? That's, Zubin, a more profound fear.
Yeah, and let's not forget, very few have set up control towers to track value or reusability. Most are treating AI like a bolt on, not the OS. And most banks seem to be fixated on features like copilots rather than building the future of AI. Additionally, they are ignoring their governance processes, which have remained largely unchanged. In fact, I heard a good one the other day, and I think, Aman, you'll like this. Culture eats co-pilots for breakfast, and no one has even served lunch to governance yet.
I love it. I might borrow that. So look, those are the high level challenges. Let's shift gears, Zubin, because while the vision is bold and beautiful, the present promises to bring significant challenges to the tech and finance dynasties, if you'd like. We feel there are four use cases.
Oh no, I don't know if I'm loving these theme references or we're going down a bit of a dad joke sort of theme, but let's keep on with it. And we're talking about the future. Firstly, it's really about fraud detection and tech security, which are really paramount. AI self-learning models offer real-time anomaly detection, AML, KYC automation, far surpassing old rule engines. You and I both work at HSBC, and for instance, they scan millions of transactions instantly. And regarding tech security, there's, I think, significant challenges. And we just heard Sam Altman recently, I think it was last week, warn about AI powered attacks on banks that are still relying on voice and facial ID.
You're right, Zubin, as always. Tech security needs an immediate overhaul. Operational efficiency is another critical area. AI supercharges RPA, robotic process automation, for tasks like loan processing and compliance. JP Morgan, in fact, JP Morgan Chase's coin system uses AI to review its loan agreements. And what I found really interesting the other day was Goldman Sachs CEO, what's his name? D. Saul, that's his DJ name, noted that AI can draft 95% of an S1 in minutes. So a task that previously took weeks for a team of six, down to minutes.
And I would say take that one step further. And the third is really around customer experience. And we've seen that with Bank of America experimenting with their Erica virtual assistant, or even Capital One with their Eno. And we've seen Starling Bank kind of start doing that more recently with their spending intelligence, which ironically is powered by Google's Gemini. all are leveraging AI and personalization and natural language interactions really to contextualize your spending.
Finally, Zubin, lending and working capital. We're just at the beginning of the beginning here, but we're starting to see alternative credit scores and faster underwriting, all making credit a lot more accessible. Imagine small businesses getting loans approved in minutes instead of days or weeks. Because AI analyzes not just their bank statements, but their utility bills, online reviews, and data for really a holistic risk profile. So I think Zubin, let's use this to shift gears yet one more time. We've talked about what AI can do for solving for today, the nuts and bolts of efficiency and better fraud detection. But the real game changer, I think you and I agree on, is what's coming next.
Exactly. There's next-gen capabilities go beyond just the simple automation. We're moving towards proactivity, autonomy, and deep integrations across the entire banking stack. And this is the stuff that's going to redefine how banks operate, engage with their customers, and make decisions.
First up is the evolution of Gen AI or generative AI. We're moving from simple ask and answer of a chatbot to fluid human-like interactions. You've all experienced it a little bit, or well, many of you have. This means conversational co-pilots that don't just regurgitate FAQs. They can understand tone, intent, context to deliver a nuanced and helpful support. On the back end, Gen AI is being utilized for content generation, summarizing financial reports. We just talked about that, drafting personalized emails for clients, and building internal knowledge bases.
Yep. And then it's kind of keeping it that theme. Sort of second up is about a shift from sort of single-use model to what we're calling agentic AI, or what the world's calling agentic AI, or multi-agent systems. And think of it as moving from a single tool to a team of collaborative AI co-workers.
Yeah, and agentic AI is a system that can reason, plan, and act on a goal with limited oversight. But it really gets powerful when you introduce the multi-agent system. That's where you have an orchestrator and a domain-specific agent or agents all working together.
Yeah, and like imagine like a loan officer just summarizing a file. Notes say an agentic system could gather those missing documents, run compliance checks, draft the offer, and then get a final sign off from a human, and doing all of that autonomously. That's the real game changer. And I love this that I read just yesterday, Delve, which really started by a 21-year-old MIT dropout. And I believe they've raised about 32 million with a 300 million valuation. And they're really solving sort of the automation of due diligence and compliance for things like SOC 2, PCI, and all of this for large, for fintechs and large financial institutions, which really are compliance checks too in a lot of ways.
And to make this all possible, Zubin, you need the right plumbing. And that brings us to number 3, which is Model Context Protocol, or MCP. Back in the 90s, it meant something else. But this is a game changer for secure and scalable AI integrations in banks.
MCP is the rails that make advanced AI safe and in a regulated environment.
Which is a perfect way to lead to our return of the Prof. Z for a quick masterclass on MCP.
To truly grasp what MCP is and why it's so important, let's unpack a couple of key concepts. Think about large language models or LLMs like the brain of an AI. At first, an LLM on its own is limited. Ask it to send an email and it can't. It lacks the context. It's this powerful text generator, but isolated. The next step was about combining LLMs with tools, which are essentially APIs. My go-to LLM is Google's Gemini. Alone, it's just a language model, but connected to Google's vast knowledge graph, and suddenly it's incredibly useful. So LLMs become much more powerful when linked to tools. However, developers quickly hit a wall. Copy-pasting these tools into LLMs was cumbersome, and each tool had a different format. It was a chaotic mess trying to make them all work together. And this is where MCPs come in. MCP is a layer that sits between your LLM and all those tools and services. It translates everything into a unified format the LLM understands. It makes it incredibly easy for LLMs to connect with and access outside resources like databases or other applications, solving that messy integration problem. This brings us to standards. MCP is an open standard developed by Anthropic. And why are standards so vital? They're the invisible rules that let different systems talk to each other seamlessly. Think of REST API, a standard that almost every company uses for their services, making it easy for engineers to connect. MCP aims to be that foundational standard for AI, allowing AI systems to easily interact with resources, tools, and prompts. Now, I know RTP is not as sexy as Manic, but let's hope it sticks. But beyond just making things connect, MCPs provide a secure foundation for AI interactions, acting as a very strict security guard. It ensures that every interaction an AI has is secure, verified, and ensures that the AI only accesses the bare minimum it needs. MCP is not just about making LLMs smarter, it's about creating a universal standard for safer and more reliable interactions with the digital world.
Zubin, that was brilliant. Da Vinci says genius is making complicated simple. You just performed another masterclass there. As always, I have a couple of questions.
I'm humbled, but shoot, I hope I have answers to these questions.
Okay, the first question is, what's the difference between MCPs and APIs?
That's a great question, Aman. And think of it this way. API is a specific tool, like a single instruction for a developer. An example of this would be retrieve bank balance or make a payment. An MCP is an entire toolbox, which is a standardized protocol built for AI agents to understand and use various tools, in this case, APIs, seamlessly. And while an MCP will use APIs, it's the layers that allows the AI model to utilize hundreds of different APIs without custom code for each, acting as a universal instruction manual for all the tools.
Zubin, make this real for us. What are some of the use cases of MCP?
Yeah, the use cases are growing by the day. And I'll focus my examples on sort of the payments aspect of it, which is where we have a lot of our experience.
Yeah.
You take someone like Starling Bank that is using AI for spend insights. And then you have someone like Fi Money coming along and offering a more comprehensive MCP implementation for their customers. And the Fi Money MCP was a really good example, which allows users to securely connect their entire financial data from bank account to investments into an MCP compatible AI assistant. This sort of enables this private, contextually aware responses to complex financial questions. Imagine if I could just ask this agent to says, what are the 3 mistakes in my portfolio? And it's able to give me actionable outcomes based on real contextual data.
I suspect a computer would need major computer be able to just narrow it down to 3 mistakes for you, Zubin. But the other, cheap shot. The other thing that we talked about at the top of this session was agentic commerce. I know this is something you and I are super excited about. And it's another popular AI capability. How does MCP enable that or help you get there?
Agentic commerce is the next frontier. It's when a digital agent can sort of act autonomously to shop and make a purchase on your behalf. Now, MCP is a key piece of infrastructure that makes it all possible. Without MCPs, an AI can tell you what to buy, but it can't actually do the buying. It's stuck in this sort of quote unquote recommendation loop. But with an MCP, the AI agent is given the tools to orchestrate a multi-step process. And what I mean by that, it can query a store's almost a product database. And in my definition, the tools or the APIs, compare prices across different sites. Again, another tool or resource that's applied to that MCP, and then authenticate the user and execute that payment. Again, with the right rules and permissions, using a payments tool, resources, and payments API. MCP is the universal language that allows these autonomous agents to connect all those pieces together, turning a smart suggestion into an actionable outcome.
Zubin, before closing out this segment on the future uses of AI in banking, I think it's critical for us to also call out the need for responsible AI, governance, and explainability. These are no longer just buzzwords, or in the words of Rick Astley, how do we ensure these systems are never going to give you up, never going to let you down?
You're stuck on those 90s themes. I can't believe I've been rickrolled on compliance. But in all seriousness, really great call out. And like in lending and compliance, regulators and customers demand to know why a decision was made. And that's sort of explainable AI or XAI, and really the foundation for building ethical guardrails to ensure fairness, detect biases and maintain trust in these powerful systems.
So, gear shift number 5. Who's getting this right? Zubin, you and I have been chatting about this for a while, and we believe that banks who are excelling in AI are doing 4 things. Why don't you kick us off with the first?
I think the first one is a bold bank-wide vision. And it's not about let's test an AI thing. They're baking it into their operating model and giving it a seat at the top table. And I'll give you an example of this. You've seen someone like JP Morgan invest a sizable amount of capital and really backing that AI mandate, not just with that capital, but executive ownership.
Second, we think they transform entire domains and processes and journeys rather than just deploying narrow use cases or pilots, which I referred to earlier. Stop letting 1,000 flowers bloom. These banks are targeted in how and where they are rewiring, underwriting, rebuilding collections, or even redesigning their onboarding processes.
Third, they have to have an informed and evolved perspective of where AI is going and are skating to where the puck is going to be and not where it is. And obviously, I'm borrowing that phrase from his hockey legend Wayne Gretzky to keep with your theme. This means that they're building for a world where comprehensive stacks of AI capabilities powered by these multi-agent systems exist and provide that operational balance.
Are keeping the pace, Zubin. Fourth is the smartest banks aren't just building AI. They're building the scaffolding around it. This involves setting up cross-functional squads across technology, data, and banking, all centered around like a central AI control tower. Think of it as mission control for your AI strategy. Coordinating design decisions, managing for risk, and ensuring my favorite word, reusability of AI assets across the bank. Add to that a governance capability or council to vet ethics, concerns, and deployment risks. And suddenly, AI isn't just a shiny tool. It's a system that you have built to scale responsibly.
Spot on. And I'm going to build off that last point that you just said. And I actually think it's probably the most important one of them all. The forerunners of AI aren't just chasing performance, they're anchoring it on responsibility. That means designing AI systems that are transparent, explainable, and fair, with humans firmly in that view. And they're also doubling down on data privacy, robust infrastructure, and really staying ahead of that shifting AI regulation. Because in fintech, trust is the ultimate currency.
Touche. Zubin, in a world where Gen AI is getting cheaper day by day and data more abundant than ever, banks really have 2 choices: patch the old pipes or lay new foundations.
I feel like there's a mic drop moment coming on.
It's more than a mic drop, Zubin. It's a tectonic shift, the kind of pivot in banking that it hasn't seen really in its last 3,000 years. You think about this from the temples of trust in Babylon to ledgers from Renaissance Europe that became logic and mainframes in California. This is bigger.
All right, you got me listening. I'll bring it home.
3 reasons why this AI movement is not a feature update, but it's a fundamental rewrite. First, AI breaks the linear progression of banking. For centuries, banks have been palaces of profitability, protected, if you'd like, by moats of inconvenience. I have an interesting graphic. We'll try and throw that up here. Legacy tech, scale, regulation all helped keep challenges out and customers in. But agentic AI, it vaporizes that moat, because now a smart agent doesn't care how big your branch network is. It cares how fast you respond, how well you understand the context, how deeply you personalize. Convenience becomes the new fortress, and it's one where you can't build with sort of batch systems and backlogs.
So you're saying that the castle's still standing, but the drones are taking over.
Exactly. Because here's the thing. You can't be a fortress and a platform at the same time. AI forces you to think in a non-linear way. It's no longer about broadcasting rates and reports. It's about real-time interactions, infinite feedback loops, and transparency baked into every click. That requires scale, yes, but it also requires partnerships, open APIs, privacy engineering, and data liquidity. And most of all, Zubin, an engineering mindset. not just how we sell more mortgages, but how do we build the OS for money?
Wait, so the modern banker is more a builder than a broker?
Spot on. This new era will reward those who think like engineers. People who see infrastructure as a competitive edge, who optimize not for transactions, but for the velocity of trust. It doesn't mean that profits go out of the window, Zubin. It means profits come from different places, from better orchestration, deeper context, and smarter systems.
From palaces of profitability to protocols of intelligence.
Boom. There it is. Mic dropped and hopefully castle upgraded.
All right, with that, we'll see you next time. Until then.
Keep your co-pilots tight, your prompts clean, and your orchestration mean.